Check, check, quick sound check. Can everybody hear us loud and clear? What's
Check,
going on,
check.
Coach Paul? How are we doing today? Coach Paul, you there?
Well, all right, Coach. Can you hear me?
I can hear you. Looks good, sounds
Yeah.
good. And we have our first
Okay.
guest on at the buzzer today, Nick Fortick. Nick, how you doing today?
I'm doing well. Good to hang out with you guys here after the bell. I know it's been a wild day in the markets. I had a pretty quiet day. I made most of my money before the opening bell. I went short near the highs and took profit and then never got back in, locked myself out and missed another 400 points on the NQ flush. So
It
it's all good.
happens. It happens. Welcome everyone to At the Buzzer, our market recap. If this is your first time here, I'm Coach Jay. That is Coach Paul, and our first guest, Coach Paul just left, but he'll be back. Our first guest is Nick Fortick. Welcome, Nick. If this is your first time here, the goal of this session is to review what happened in the markets for the day. We may talk about some markets that you have not traded before, but we believe our goal as traders is to identify opportunity, see how we could have taken advantage of those opportunities while managing our risk. But we have a guest today. Nick, tell us why you're here today.
Yeah, it's Mag 7 earnings season. If you guys have been living under a rock, that has been the event that the market has been waiting for, consolidating, making a big move, waiting, consolidating. And today we have now on the docket, Tim Apple once again having to save the world from this violent day to the downside that we had. Amazon actually just reported, and they actually have reported very positive earnings. In fact, actually beat top and bottom. Actually beat on their EPS, net sales, and even AWS. Actually, AWS actually did miss. I think about it. Maybe that is part of the reason we are kind of stalling here around the 200 mark on Amazon. But AWS actually did miss very, very slightly on their top and bottom. So we might have to go and listen to Andy Jassy and hear what he's got to say on the earnings call for Amazon. But one of the largest bellwethers inside of the NASDAQ being Amazon, did report relatively positive earnings, kind of mixed, obviously, when you factor in that cloud revenue as well. So we'll have to see and understand a little bit more about that guidance. But that's why I'm here, is to talk a little bit about this wonderful week that we have once a quarter. That is majority of the Mag 7 reporting their earnings. And I think we've kind of had a mixed bag so far, Jay. Would you happen to agree? I think we had a good report from Microsoft. You had a kind of lackluster reaction to Meta's positive earnings. And then Microsoft's guidance, I think, struck the fear of God a little bit into this market at the all-time highs. Naturally,
Absolutely.
we're seeing, I think, a little bit of profit taking. And I think that's kind of what we saw, at least in the early part of today's session, a little bit of that weakness in tech. Obviously, the elephant in the room also being the potential future scandal with SMCI and their accounting fraud allegations that are, coming to fruition here. And obviously that affects NVIDIA, being that roughly 10% of their revenue comes from that specific company. So
We
we'll
have
have to kind
NVIDIA
of wait for the dust.
reporting. When's that? NVIDIA's reporting in about 2 weeks, I believe it is.
I think
I
it's
saw
2 weeks. I'll have to double
Okay.
check the day. But yeah, that definitely is a relatively concerning. Anytime you see, I think, general counsel of your legal arm of organizations stepping aside, or anybody in the financial world at some of these organizations,
something's happening.
Something's not good. So hopefully that does not, NVIDIA can weather that storm and still do what they're doing. I don't think the AI race is in any way, shape, or form over. And I think Zuckerberg made that very clear in talking about some of his future AI spend that they're planning as far as Meta Labs yesterday. Still more or less just an advertising company, it seems, these days, but it seems like they're trying, they're spending the money to do things for the future. We'll have to see how that kind of shakes out. But as far as, kind of the reaction coming out of Microsoft yesterday, I definitely think that is what led to at least the start of the weakness today. And then you see people taking profit and pushing us down even further. And then you compile that with what was going on with, the weakness in the semis from SMCI, you get the perfect storm. And that's probably what we had today. So at this point, like I said, Amazon kind of a half beat, but we'll have to see how they guide on their call going forward, because you could have as good of earnings as possible. And that could still bite you in the butt as you come into your earnings call later. So
For sure.
NVIDIA hitting
Nick,
bit of a brick wall.
Sorry, I think we got Coach. No problem. Coach Paul has a question for you. Go ahead, Coach.
Sure.
Yeah. Nick, I didn't hear the headlines today. But when I hear the word fraud in accounting, I get triggered and think of '08. So do you think that was a major factor in today's action, or end of the month, or the
I
election? But
I think it's a little bit of everything. We've had such strength at all-time highs the last few weeks that you just kind of needed. We've been saying this. We talked about it on my show. I think Dakota and I have talked about it on slow markets too. We've been talking about it on fast markets. Like without a catalyst or something, you need a reason for people to take profit. Well, you kind of got that gift if you've been like uber long tech for the last few months. This potential fraud, we're still getting the details. Obviously, all we have is that Ernst and Young is parting ways in theory with them as an organization or as their auditor, however you want to look at what that press release that they had come out was. I think we still are going to wait for the dust to clear a little bit, but that compiled with I think the potential headline risk with what's going on in the Middle East, as well as going into election day on Tuesday, you kind of had that perfect storm of a reason for people to take some profit, which is, I think, what we've kind of been waiting for, hoping for, looking for some aspect of a bidirectional trade. You kind of got that a little bit today. Granted, we didn't really have any buyable bounces in theory that you could have really gotten long with and taken, and rode for most of the day. We didn't get that V bottom that I think we've become very accustomed to at times. So we'll have to wait and see. But I think the market was just looking for some reason to fall down the elevator shaft the last few sessions. And the last two sessions, we really did get that. So you've had a good solid 800 points down almost on the NASDAQ, in ES about 100, 150.
3,788 high of the day in the NASDAQ yesterday. And from that point, pretty much 800 points to the downside. We didn't take out that 20,000. And I know from a technical perspective, we were just talking about, some moving averages on the S&Ps and the NASDAQ. We don't have numbers out of Apple yet, right? From what I'm seeing, I see Intel reported as well, but nothing out of Apple.
Yeah, Intel beat, small beat, roughly 2 cents on the EPS and about 30 million revenue beat. So they actually beat, 13.3 billion against a 13.02 estimate. And actually their adjusted EPS actually was positive 12 cents as opposed to negative 2, which was Street was expecting. So actually a positive turn out of Intel with, I think, the horrifying quarter they had back in August. So this is at least positive news, because that's somebody that I think really did miss the AI train and everything that they were doing and how intertwined they were, I think, in a lot of the chip making in the past. And they were very much in the the government side of the arm of getting some of the benefit from the CHIPS Act and other things to building that plant. I think that they were going to be really pushing for in Goodyear, Arizona. So seeing them make some strides, and that's actually very refreshing, since they were, almost, I think a bad quarter here could have been a nail in the coffin. And you start to look at, do they start talking about being acquired at that point if they were to continue to fumble the way they were? When you go back to even, I mean, Paul, I'm sure you were paying attention too, like back in the chip shortage of post-COVID, like from that point on, everything that has anything to do with, computing and these type of chips has just been shooting to the moon. And the fact that they have taken like zero
That's not the name you
advantage of
think
that.
of when you think of that.
It just, which is crazy when you think of the head start that they've had for decades in that space. So good to see them having a positive quarter, and at least potentially finding a bottom here.
Something
So,
there.
was SCMI,
SMCI.
and that company makes chips for AI. Is that correct? They're a chip supplier.
I believe that is correct. Yeah, I believe that is correct. I don't know exactly what SMCI does. Do you know, Nick?
So let's see, I'm trying to find the most simplistic definition of how I can describe how they fit into NVIDIA's world here for everybody. Let me find the easiest way.
I don't know, because by the way, I got really bearish today when I turned on fast markets. I took the hint. There was a bear there. And then the dump, but now I'm hearing the reasons. Because
So
that really
SMCI
concerns
is
me.
really going to sit more in NVIDIA's like server world. That's probably the easiest way to describe it. So when we're
Yeah.
talking about,
Okay.
cloud computing and things like that, that's where SMCI is really going to play. I don't exactly know from NVIDIA's last earnings report what percentage of their business is really coming from, I guess, the cloud computing world more or less these days between, Azure, GCP, and AWS. But that's somebody else that's once
So,
again making those part of those components that will sit on, I think, a lot of the server racks.
so it's AI type of business. It's heavily reliant on the AI sector.
It's hard to know these days since every CEO and their
Everything is
mother
AI.
is just screaming the words AI.
Right.
Yeah. And Nick,
It
part
just
of the reason we have you on here, Coach Paul and I say it all the time, and I think you are as well. We're very much technical traders, and sometimes the fundamentals. Sometimes the story comes out after the fact, right? Something happens, and then we see the news afterwards. I know you have some experience, even working at some of these, big tech firms. How do you apply the information that you're seeing in some of these earnings reports to your trades, if at all?
Not a whole lot for me. I mean, that was my old world, more or less. It just gives me a pulse. I think I've used the terminology of like, hey, what is like how does business to business type spend? How is that affecting outlook? So somebody like an AWS, are they continuing seeing cloud growth, or are we starting to see companies dial back some of that next generation of infrastructure spend? Are they continuing to develop their own technologies, their own system on some of these cloud providers? Are we starting to see that B2B spend for someone like a Salesforce or a ServiceNow? Does that pull back at all? Do we see that type of growth stall for some of those type of companies? And when you see that, you can kind of see that potential weakness in aspects of different parts of tech, and obviously that's going to very much affect the way NQ can trade at times. Unfortunately, it doesn't matter as much because the market has the memory of a goldfish at times, and when it can move based on five companies, you kind of need to throw fundamentals out for what we do every day.
Exactly.
I feel like it doesn't matter if you're a single stock trader, if you trade options or other things, or you're looking at your long-term hold portfolio. That's a whole different conversation that we could have when I'm looking at fundamentals of those companies, looking at growth, looking at innovation and things. um that is a whole different ball game when I'm looking at my long only type portfolio versus my day trades with NQ, which, yes, of course, I have no problem trying to short the top of an all-time high because that's a very different trade than what I'm doing everywhere else. But me trying to scalp 30 points off, NQ making an exhaustive push to the upside, sure, happy to do it. But that's very different
Absolutely.
than me looking to long, Nvidia at 100 kind of thing.
Sure.
that
We got about
brings me up.
go
A
ahead, Coach.
question for me is, in your experience, these earning seasons, do they make a big difference in the direction over the next month till the next season? Or is it just kind of a shock to the system and then we wait for the next earnings?
I think it can have a short-term reaction, more or less, but it can also drive us into a new, I would say, like a 4-hour trend based on, a week like this when you have so many of the big bellwethers reporting. But when we get a mixed bag like we have so far, it's hard to really know. Now the market probably moves on to the election after today, and now all eyes are on who's running the White House going forward, and what that means for some of these companies is, one way or the other. That's probably the direction the market goes. And then shortly after, we may get a trend for the next couple weeks. We go into holiday season, and then it kind of, volume dies a little bit. People start shoring up their books. I think that trade changes slightly, and I think Apple is out. Let's see.
Just got the countdown. Don't see the numbers yet, but that countdown is finished.
Well, we
It
just making
is.
new lows in the S&Ps.
All right, let's pull up the charts real quick and see what they look like. Nasdaq still didn't trade below that 20,000, and we'll get to the chart analysis in just a few minutes after we get this Apple number, whenever that does print. But while we're waiting for it, if you haven't already, make sure you hit that thumbs up button. If not for the information that we're providing for the pretty good production value, bringing in our first guest into the show, I have to say myself, it's going off pretty smooth. And thank you guys for that.
We made it. We did.
We made it. We made it. It's a win. It's a win.
Apple chopping around, still hovering around kind of where we closed around 226. So far, not seeing anything out yet. Oh, yep, there it is. Apple beats revenue 94.93 billion against 94.36 estimate. EPS lower than expected. 97 cents versus $1.46 expected. So we'll have to see on that front. But so far, relatively bullish reaction, still right around where we were trading most of the day. We'll have to kind of see how the breakdown is as far as revenue and EPS for each segment. I know there was rumors that the iPhone 16 was rather lackluster as far as a release. I think a lot of people were expecting more. I still haven't heard a peep, Jay, about the $3,000 snow goggles, ski goggles, snorkel, whatever.
You know anybody that has them?
I know one person who did and returned them.
Yeah. You could spend $3,000.
Why did they return them? Did they say?
They just did not like them.
Oh, interesting.
I mean, I like the way
the $3,000 better.
Oh yeah, for sure. I like what they're thinking, right? Trying to innovate. It's the first version of the product, and I've heard a bunch of people say, that they were the pro version. And if you know how Apple works, there's a pro version, and then there's a standard version of it. I'm curious to see whether or not they put out a product similar at a lower price point that might entice a couple more people to buy it. $3,000, you're not going to get an average consumer to pay for that.
It's pretty clear that there's going to be some aspect of augmented reality type use cases, whether it be just the way your personal computing goes in the future, just in a much smaller setting, kind of thing where it's eyeglasses, it's a contact lens. But I think we're years away from something that has that kind of compute power and isn't a complete helmet that you have to put on or carry around a battery with you right now, which I think is part of the problem. And then you have the whole nausea thing to get over for, I think, a lot of people. And obviously that can't be good.
Yeah,
that type of signals and microwaves and God knows everything else that's just that close to your frontal lobe at all times. But we'll see. We'll see how it kind of develops. I think in everyone's heart, shape, and mind, this is turning into, a Ready Player One type thing. But then you see all those videos when they release that, and it is still rather dystopian when you kind of look at it.
It reminds me back the Chicago Board of Trade tried to develop goggles to trade in the pit, where you would have live action of the pit, but you would make your trades through these goggles. It was called Project Aurora, and that was 25 years ago, 30 years ago.
Really?
I just can't. Yeah.
Ooh,
like you would see traders and mark your cards. What do you see?
We're getting, so the breakdown's coming out a little bit more. It looks like the China revenue actually is down almost about $1 billion versus expectations, 15.03 billion versus the estimate of 15.8 coming out of China. Mac revenue right on estimates. iPhone revenue actually did in fact beat. Services missed. Wearables obviously missed. 9 billion. 9 million versus the 9.17 estimate. Declaring a cash dividend of 25 cents a share. But so far, the reaction to that has been relatively negative. We are dipping down to around the 220 mark on Apple. We bounced pretty much right off of that.
Like Apple's turning into a services company. That service revenue keeps getting closer to their flagship product, which is the iPhone right now. And eventually, I think it's just going to become a healthcare banking company.
Yep. But so far, Apple double beat on the, I guess what matters, top and bottom. But
Steve Jobs is spinning in his grave.
I know, Paul. I know this has become a DAO company at the end of the day, where they're not really growing anymore. There's not really innovation, but they're still just funneling money into them, and continuing to have very, very large revenue and sales numbers, but they're not really doing anything. And I think the innovation has died since, the passing of Steve Jobs. They really, when's the last thing they've really developed that's been, revolutionary, change the world type of a product? They just don't do it anymore. Everything is updates, new features, new cool stuff, but nothing that's, I mean, I'm still using an iPhone
fees.
13.
I have a question on that. How real is it an unfair expectation that we put on Apple to innovate a product that will change the world again after already doing it once?
Is it unfair? Yes, I would say that is a fair statement. But when they've kind of become the organization that was setting trends,
Right.
now they're just kind of, like I said, it just seems like it's almost like a company that's just coasting and has so much cash, and they really, in a weird way, they might take a hit on the stock if they pulled a Zuckerberg thing and just started really reinvesting in R&D and new, some acquisitions, like other stuff that could lead to them creating or acquiring something that turns into that new revolutionary product. I have no problem with that. But to just kind of sit back and, see just stock buybacks and, earnings per share and these other things, it's just sad, I guess. You kind of are hoping for, wishing for more out of them because they are that big and they have so much cash that they could try these things. And if it doesn't work, you'll move forward. I don't know. That's my Tim Apple not saving the world thus far.
Not saving it. Someone else has to do it. Let's get into the charts a little bit then.
Let's do it.
Nick, thank you for joining. If you want to hang around, please do. I think this has
I'll
been
hang
great
out.
so far. But the way we start at the buzzer usually is by looking at the top percentage movers on the day. There are about 35 different markets that we can trade with Top Step accounts, not just the equities. And let's look at it. To the downside, we have micro Bitcoin, which has been on that upside list the past couple of days. Micro Bitcoin coming in at number 3, 2.72%. Silver down 3.68%, and nat gas, our biggest percentage mover to the downside, at 4.39%. To the upside, all of the energies: crude oil up 2.61%, heating oil up 2.85%, and soybean oil up 3.56% for our biggest percentage mover to the upside. To round out the big four, we already talked about crude, 2.61 to the upside, and everything else was to the downside. Gold down 1.59%, the S&Ps down 1.97%, and the Nasdaq, the biggest percentage mover to the downside in our big four, at 2.41% to the downside. Let's pull up the charts. We'll look at a 30-minute chart on the Nasdaq. We'll go to last night's open, and you guys have kind of talked about it. Actually, let's look at a daily chart first. This 50-day moving average. The lines that I have on my chart here: the yellow 20 moving average, purple is the 50, and the white one is the 200. The Nasdaq 50-day moving average was at 20,004. We can call it pretty much that 20,000 even level. We sold down towards the 20 moving average today, and then of course yesterday we sold down towards the 20 moving average, and today we see we closed under the 20 and pretty much at the 50. End of the month, do we think that this is just end of the month price action here, and we're taking profits? So what do we think, Coach?
I'm thinking all the above.
There we go.
And exacerbate, like we said, we've come off how many points in the last 2 days from the highs, where the highs of the
100.
move, just to come right back 800 points. So that's little more than quote unquote profit taking because of the velocity of the move, in my opinion. Um, and I think it's more of a wider, for me, the S&P is leading the way down because it was leading the way up. But we talked about this yesterday. The Nasdaq didn't finish under the 20-day moving average, but the S&P did. So, and without going there, but today when we opened up, we were right at that 20-day moving average, and on the daily, then we got under the 200, and VWAP left left the open, and it was just continuous selling. To me, all the above. The great concern about this election and what the results will be after. I'm I don't watch the headlines, and just hearing Ernst and Young and fraud, I get triggered. Like, that's serious stuff. Especially with all the promise of AI, and you have big money leaning to the ownership, and just end of the month. Um, Let me ask you, if you had a large proportion of your wealth in stocks, seeing all that storm clouds, would you lighten up? Would you hedge? Or would you get flat?
I'd probably lighten up for sure. Coming into the election end of the month, uh, we do have news out tomorrow as well. Probably be lighten. I know I wouldn't be allocating a whole bunch right now, unless I knew that the market was going to react favorably to a certain outcome. Um, I'd say it that way.
Yeah, I, that's what seems to me. We're still above the 200-day moving average, but overall, the velocity of this just, you know, it's only been 2 days for this dramatic move, which, is it expected or unexpected? Well, I think if it was expected, it would have happened earlier. Um, but um, I don't know. There's trouble ahead. Um, and to me, and I'm a technician, reflecting on a longer term trend, using the daily, it's not a bear market. Red flags are up. It was a great sell this morning. If we look at the half-hour bar from this morning, attached the VWAP to it, and there's the witness that they couldn't think about that. The size of that half-hour bar.
On the New York Open, yeah, this
That's
was
yeah.
This was the type of opening range, even if we go down to a 3 minute. And Nick, if you see anything technical, that I know you've been looking at this 1 minute opening range, the 3 minute range in the Nasdaq, it was 100 points. And we're looking for a trade during fast markets, and it's just like, okay, do we get a pullback? And sometimes you do. And today there was not a buyer in sight. Yeah, they just sold it off the open and kept going. What do you see from what did you see, Nick, from a technical perspective that made you get in short? I know you said you were short in the pre-market. What were you looking at?
Yeah, so a little bit of where it goes back. If you guys remember, I think it was Monday,
You
maybe
can
it
pull
was
up your charts
Tuesday.
too if that's easier.
I guess I could do that. So I gotta look at my other screen.
My bad.
Sorry, I threw my Topstep X on another screen, so I didn't have to stare at it while I was doing other stuff for earnings. Let me jump back.
Put them on the spot. And chat, if you have any questions, do let us know. We have our great mod Andrew sending us questions. So if you do have any questions for us, put them in the chat and we can get to those. But go ahead, Nick. We have your charts up now.
Yep. So if you guys remember, on Monday or even Sunday, we were talking about last week's point of control being around this kind of 440s, 450s spot. And then more specifically, Monday's low was intriguing to me, or not Monday's, I think it was Tuesday's low, was around 430s. I missed along there by like 2 ticks. I think the low of that session on Tuesday was like 432, and I just didn't limit in and had a bad day chasing it after. So you keep levels in the back of your mind. And for me, waking up and seeing the sell from the London Open that we had, and then us making an attempt in the pre-market to go once again take out that 430 spot, and us rejecting off of it. We came to like 415 on like the second attempt back around. It was like whatever. I don't remember what news it was specifically this morning, but it was very weak kind of little, wick up, and we failed right before it. And I jumped in short around 410, just knowing that on Tuesday, as well as even going back to my Sunday prep, below 450s, you're kind of on the second half of last week's distribution. And if we can get some more weakness, it's going to be violent. So naturally, when I'm trading pre-market, I am not greedy. I know I caught a very nice trade in the overnight, but I was not trading in the overnight last night like I was the other day. So I took a short off that 410 type spot, and I closed it as we were kind of fluttering, I think between 370. I think in the open, it popped back up to like 380 something. And I just covered and got out, and then watched it waterfall 400 points. So
Gotta love when that happens.
that's the trade. But at the same time, I took a very similar setup of a trade going back, around 760s in the overnight Wednesday morning. But that's because I was actually watching and actually trying to, be in a trade from this. I was looking at it like, hey, let me see if I can get 20 points. I had a huge day yesterday in my XFAs. Let's just take it and move on. And then I basically said, let me get out of this trade. And I was in a tattoo session last night, and the day after I have these like really long night sessions when you're just getting stuck with needles all night, very similar to having a trade move against you on the NASDAQ. So when I have those sessions and my sleep is poor because you're kind of in pain the next day, I usually like to either not trade or lock it up very early. So that's what I did. And unfortunately, there was more money to be had, but this, Jay, you were just saying it. This was a day where it was kind of close your eyes and short it off the open. And if you didn't, you really never got a good attempt at a reoffer, like, because buyers were nowhere to be found on this tape. So you had no other real shot outside of just closing your eyes and shorting it, or I think shorting around maybe 200s or one, I don't know, it was something in the later part of the morning. I think that you guys were trying to do, it was like 119s, whatever it was. But that was like the only other good short you really had today.
Nick, we have this discussion a lot with our traders because I'm focusing on day trading. When you said 20 ticks, is that what you're usually looking for, or do you look at risk reward ratios? We've had this discussion a lot here in the last few weeks.
It depends on, so I'm not a big pre-market trader. I usually like to wait for the open. So me covering for a quick 20 points, not even 20 ticks, really just came down to me, trailing a stop with the move in the pre-market and, wanting to just lock something in. Jay and I've had this discussion too, where for me, that is almost like that first trade of the day that you do to kind of get your trigger finger away. So you're not just then lunging into a trade without thinking, because you've already kind of gotten the cobwebs off and you're not itching to take a trade. So once you kind of get that out of your system, you can see price action, I think, a little bit better. So that's all this was for me. But I historically have always been that kind of scalper, but I will trail in profit pretty quickly. So even if I'm taking down 10 points, 15 points, 20, 30 as it's moving, I don't feel like garbage after thinking I missed a move, because no, I took some money off the table and I can move on to the next trade versus putting it to break even and then getting tagged and then FOMOing back into a trade. So it keeps me from doing that, I guess is what I'm saying.
Are you predominantly trading NASDAQ? Do you trade anything else?
ES and NASDAQ. That's really
yes, too.
That's really about it these days. I've been trying to trade ES a little bit more just because some of my reads in the NASDAQ have been correct, but I've gotten wicked and stopped out, versus ES. It's only moved a couple points and I still could be riding that same trade. Yeah. So it's like, there's times when it's like, if I'm trying to catch a bigger move, or I feel like I'm catching a top or a bottom, or it's one of those that it's a low risk, cheap short, cheap long, whatever. That's like, I could get a more outsized move, and I feel like I can capture that easier in ES lately, at least the way it's been moving as of late. NQ has just been wicking everybody left and right.
Oh God! Well, that's the history, and it's the personality.
100%.
Do you adjust your size at all, or do you do the same size all the time?
So I'm pretty standard around 3 lots when I trade NQ. Yes, usually in my live, or when I have more than, let's say, a $3,000 drawdown, like in a new XFA or something, I'll trade 5 on ES. That's pretty much my size these days. I don't really trade more than, and if I trade more than 3 NQ, I usually am in a bad place. I will say that.
yeah, because let me ask you, does that affect your decision making under pressure because of the leverage, that you don't have room for error, and every little juke against you is like terrorizing? I found that to my case when I know when I have too much on, or I used to, I just won't do it anymore. But like, if you have too much on, your perspective can change. Do you notice that in yours?
Yeah, I'm much more likely to fold a trade early when I have size on. out of fear, I guess, from moving against me, then, I mean, you guys saw it on fast markets. On Wednesday morning, I had a 3 lot on from the overnight, and I was very comfortable. It was already up 100 points, just kind of trailing my stop, 50 points away from where we were trading, and then eventually took one off. But I really was just letting the full move play out, where if I have size, I may panic flatten it and say, nope, I'm taking 30 points off the table, and, then miss the next 70 because I've got a 5 lot on NQ instead of my usual 3 lot, and allowing it to play. And there's been a lot of times in the last few weeks where me not letting the full move happen has led to me missing 80% of the move. And it was the thesis did not change on the trade. The read was correct. And, you almost just get that Greer feed, if that makes any sense, where it's like, well, I don't want to end up with nothing, so I'm going to take this off.
This is all really great perspective. Just for the chat, for those of you that don't know, Nick is consistently on that Top Step big board. So hearing the perspective from a trader that is in our top 25, if not top 10 most of the time, saying that even a 3 lot in the NASDAQ is enough, right? When you get to that point, you've built, and you're not doing that with small accounts, right? You've built up a buffer in your live account where you can, take bigger swings, and still those big swings in the NASDAQ are, 3 contracts, 5 contracts in the S&Ps. But doing it consistently is why you see the results that you have. So really great questions and answers, guys. Anything else on the equities that we do want to talk about? I do have the S&Ps up here. We closed below 5,800. We're well below that 200 moving average on the 30-minute chart, which is up at 5,860.
Jay, I think you're still on my charts, by the way.
Oh, yep, I am. There we go. Here are the S&Ps. Here are the S&Ps. We had that flat line 200 moving average. We sold off pretty strong, obviously, from it today. We're down almost 2% on the S&Ps, and holding this 20 moving average, coach, that we've seen the markets in trend start to hold. Any downside targets you guys have in the S&Ps? Do we think that this was just a bit of a sell-off? Coach, I know you were talking about the 50-day moving average, which we haven't closed below since September 11th, September 10th. Is this just a natural pullback, or are we seeing a change in market structure? Still there, Coach Paul? Nick, can you hear me?
Yeah, I can hear you.
All right, go ahead, Coach. That was for you.
Hello.
Yep, we can hear you.
Oh, we can hear you. While we're waiting for
I'm
Paul
losing you guys. Well, if you can hear me, the most important thing that I saw in the S&Ps is we closed below the 50-day moving average, simple moving average. Tomorrow's another big day. We could cascade down. But I'm going to close out and come back in because it's fluctuating heavily on my part.
Sounds good. We'll see you in a bit, Coach.
But Jay, to also answer your question there, I think it depends on, so far this relatively lackluster reaction, I think, to Apple and Amazon. I think that's still what's going to matter tomorrow. Do we continue to see some more passive selling in some of the big names? Do they find bottoms? That might lead to it. On ES specifically, I'm not seeing a ton of, you could see downside back towards 57.25s as kind of the, in more near term low volume node. So not too much further down. And then you have a larger time frame point of control back around 5,700 that we could absolutely, go to in the overnight. If the London session or the Asia session gets, a little bit weakness, that's definitely where you might find an intraday, a temporary type of bottom. But I think it really depends. Does this signal a little more, risk off and, like we said, profit taking? And do people shift in some more defensive names until we get more clarity on some of these larger companies going forward or into the election next week? So watching, I think Mag 7 is very important tomorrow, at least as how they open and is there some resilience in them? But part of it I also think is, we still have Apple's earnings call later this evening, as well as Amazon's. So we could see how they guide, how they're talking about things. How many times does Tim Apple use the words AI for Siri? We'll have to see about that. What does Jassy talk about as far as, the AWS miss. So all things are still very important. I do think that is how you can find a bottom very quickly is do the dip buyers step in at 220 in something like Apple, and kind of find that intraday bot or that intermediate bottom that we might form here. But you have the Mag 7 that has run up what 30-40% this year, Jay, and that's pretty crazy when you look at the benchmark against the S&P. So more weakness would not shock me, but I guess we'll have to kind of wait and see how we open tomorrow with the big names.
Sure. Looking at 5728 in the S&Ps here as a potential support. We can see it going back on a daily chart. That was the highs of September 3rd. We used that area as a support once we cleared above it. And then below that, I'd be looking at 5650s. So we got some targets to the downside. Nick, we got a question for you on your NASDAQ trades. How many points do you normally use on your stops for NASDAQ? I know you said you're usually looking for about 10 to 20 points on the profit side. How many points are you usually using for your stops?
10 to 15 is pretty common. I'm a little more strategic with my entries on NQ. If you guys have watched me trade, I'm entering usually a full clip. I don't usually scale in. I'm kind of in and out like that, where if I don't get the move quickly, I'd rather time stop myself or go stop break even if we're kind of just flooding around and then reset. So, and a lot of the time, like with my entries, that holds true. I can use a 10-point stop and, catch a 20, 30-point flush on the NASDAQ with little effort. It just comes down to doing what Jay is talking about here and talking about, okay, hey, if I was going to long this tomorrow and, we were kind of fluttering around this spot around 57.25, 57.28, like, hey, you got a relatively potential cheap long to at least take a shot, take a stop out. If you get weakness further down, I think Jay's right. You're probably going at least 25, 30 points lower, if not 75 points lower. So that's probably your first intraday little long opportunity that you may find. And that's just based on MGI and looking at some of this candle structure going back, Jay, what is that, to end of August into September?
August, beginning of September. Yep.
Yep.
Let's see if we can get Coach Paul back in here. I see him in the green room. Give me a second here, Coach, to get you in here. There he is. There's the man.
But if I had to lean, I think you may get tomorrow may be a big day. It's first of the month, but do we get some continuation into Tuesday? I think that shouldn't shock anybody if we do.
No, I don't think so. Nick, we haven't done one of these on this show yet, but I have a favor to ask of you. Do you have your air horn ready at all?
Air horn's always ready.
Let's talk about the market yep, you should be able to hear me. Let's talk about the market that celebrated with some air horns today. We have gold that made a new all-time high. We spent a lot of time on the equities, but gold was the real star of the show. Making a new all-time high, 28,018. And it did it in the fashion that gold likes to make all-time highs, Coach Paul. We've talked about this. Gold makes a new all-time high and then immediately sells off 50 points.
Oh, boy.
And we got the same thing today. And if you guys just look at these major levels in gold, 2,700, it did it at 2,500. Anytime we hit kind of one of these, 100 levels in gold, we get a very similar response. We made a new all-time high last night, pretty much on the open, a little bit after the open. That Asia session, I know Dakota was talking about potentially taking a long here. Was I in slow markets last night? I was. And, we talked about, maybe not wanting to be short gold for a very long time. But 2,800 is a major number, right? At this level, if we don't see the convinced buying to trade above it, obviously this is a market that's been in a very strong uptrend all year. Not surprising, though, in heavy trending markets to see profit-taking moves, and this is exactly what we got, right? We made a new all-time high, 28,018, and pretty much from that point, we just sold off down to 2740 and closed above 2750. I did take a small scalp long trade in gold, which sounds insane, on a 50-point move down, but it presented an opportunity. The one thing I did with that trade is I'm going to wait until the market shows me that it has the potential to bounce. I don't want to just long anywhere blindly in a move like this. But quick scalp trade, not looking for a whole lot because I am counter trend. But what do we see going forward in gold? We closed below the 200 moving average on the 30-minute chart, Coach. If I look at the daily, we are above the 20, above the 50, which is above the 200. Clear,
Yeah,
strong
there we go.
trend, but do we get any kind of pullback more than this?
Yeah, I would say you could quickly get a pull back to the 20-day moving average, and see how it holds from there. It's still a solid uptrend, but the volatility, the velocity of these cells is getting bigger and bigger, as we've talked earlier. Just you could see one day it's down 200-300. I'm not exaggerating. In these kind of markets, it's like, what the hell just happened?
Yeah.
Not saying it's going to happen here, but I would say, that's been the pattern. Bounce 20-day off the 20-day. As you were saying, Coach, looking for not just willy-nilly buying it because, hey, it looks cheap, but looking for some structure and failure of selling. And I think it's going to pick up that way.
Do you trade gold at all?
No, but I've been wanting to. I mean, ever since this goes back to when we did the takeover when the Topstep TV team was at their offsite. And I think we were all screaming for this to pop 2500s and go. And I've been very bullish to 3000 ever since. So I am not, when you get a move like we did today, by all means, short this, but I am still looking for bottoms to potentially still get long in gold. And I'd be rather looking for those supportive areas to try some longs than I am outside of momentum trades to the downside looking to short this. Cause I think it has a date with 3000, whether it's in January, in March, sometime in Q2, that's where it's going. So do we pull back to 2600? It's very possible. I wouldn't be shocked eventually if it did, just with everything else going on in the world, but I'm looking to long it. And if we were to go all the way back down there, I'm probably looking to, get some long exposure in other ways outside of just GC to gold.
We did have this engulfing candle, this daily candle engulfed the last 2 days range. And again, we've seen gold do this, consolidate for a day, and then just continue the trend. Like you said, Coach, we haven't, hit that 20-day moving average in a couple of days. We do see this pattern. We come back, check it, consolidate there for a little bit, and then continue. So would not be surprised. 20-day moving average right now is at 2711. But again, not a market that I want to be short for a long time. Right,
Nope.
we got about 10 minutes left here. Let's look at crude oil real quick. Crude oil, we talked about this gap down that we had that opened up the week. We had gaps pretty much in every market that you could think of. And we talked about the possible acceptance back into this gap and what that might look like. The high of the gap was 71.62, 50% of that gap 70.32, and the low right around that $69 a barrel level. And crude accepting back inside this gap, traded above 50% of it, but did it in a very interesting way. Go ahead, Coach.
Just looking at that volume
Yep.
on that rally, that was the close, was it not? The closing half hour? End of the month, in the gap. Yeah, that has the imprint of some funds flattening out right into that gap. So I'm going to be looking tonight to get a clue. I'm actually think it's going to go back to the 200 moving average personally. That just my eyes opened up at that volume. I know it's the close, but that's huge volume.
We
Most
did get some
likely
news then as well. We got news out of the Middle East at that point as well. I think Iran planning some retaliations, or Israel planning some retaliations. So, yeah, very strong move. And if that's the case, I'm with you, Coach. That the 200-day moving average you were talking about is at 74.
Very interesting.
Good.
Okay. Yeah, as we talked, we're basically within the same range we opened up with the beginning of the year.
Yep.
By the rally, and it's hard for me to buy low, sell high, but I almost want to fade every big rally and buy every big dip until proven. But starting last night, what did we do in the opening half hour?
Let's take a look at it. So let me clear off these charts. Look at the opening half hour here in Crude. We'll attach a VWAP to that. Chopped around for a little bit. Looked like we were going to sell off. Did present a decent opportunity to sell it I don't know why that keeps happening, but give me 1 second. We'll put those drawings back on one more time.
Boy, that sell-off, did that happen in London?
It did. It did. London has all the fun. London has all the fun.
I just been up at 3 o'clock in the morning. And look at that. Is that a J trade on the half an hour on that low? Is that big volume for that time frame?
Yeah, pretty decent volume here. We get that 3-bar reversal pattern, and it holds. 50% of that candle held on the downside. So even if you didn't get it at the lows, you did get a recheck of this 50%, which improves the risk to reward on that trade. And before this news spike happens, you have a decent opportunity in crude oil here to test into that gap. Again, lows of the gap, $69 a barrel. Outside of that, I don't know that this is a move that you can predict. I did see a trader in the Topstep TV chat say that, hey, thanks for that suggestion on looking at the crude oil close. It, presented a really nice opportunity. If you were long before this and you just held it through it, this is probably a trade that, we're up $1 and I don't even care what happens after. I'm just taking it off. Trade's done at that point. I made probably more than I was expecting to make, and we did test 50% of that gap. So while it did present a decent opportunity for someone who missed this move to get in, on this slight pullback, and then we trade back up to the highs of the candle, not a trade that I'd be looking to take after seeing that type of spike, especially based on news. We don't know what that volatility is going to look like. Nick, I know you don't trade crude often, but you cover it on your show because we cover the major 4 markets that we talk about at Topstep. Is there a reason you don't trade crude? Just don't like the price action, or you find better opportunities somewhere else?
No, there's always those days you look at it, you look at the indices and you're like, what the hell am I doing trading this? Because then you look over to crude or GC and you're like, that is a beautiful technical trend day, whatever, obeying MGI, opening ranges, all of that stuff. It just really comes down to, I try not to get too in the weeds with looking at too much intraday, because then I just feel like I'm trying to find trades everywhere and I don't need a reason to find a trade. I can always find a trade. Doesn't mean it's a good trade. So for me, it's just too much stimulation, if that makes any sense. I do appreciate and look at the structure and the patterns that exist in volume profile, like after the fact, like on the weekly. And I think you can find good. What I need to get better at, I guess is what I'm saying, Jay, is like using micros in my personal account, let's say, to swing some of these trends in crude or GC is a much better fit for me when the way I intraday trade the indices. I think I'd be much more successful not getting too in the weeds with the intraday price action and focus on like a 4-hour time frame and trying to catch 100 point, like a full point move in crude for 100 ticks. Like that's more my speed. I think I should get better at doing that next year.
That's a good point, Nick. You're talking about if you're going to swing that, you're going to use micros.
Yep.
Because for our audience, and I'm going to go back to it, and this is a theme. It was, if you've got too much on, you can't make good decisions. This is sometimes putting on today that for any reason. There was a 500 point range in the NASDAQ. Well, do the math. That's $1,000 on one micro.
Right.
It's there. And for our listeners who struggle, blowing up combines, you could be the perfect technician But if you don't manage the account and you get too big, you either can't hold on, or one variation swing knocks you out, and then it goes your way. I'm glad you brought that up, because it's an important focus for new traders. Get the size right.
Yep. Yeah, guys, I never sized up that way. I mean, I guess I did when I first started trading futures, because I really thought I knew what I was doing, throwing around 5 lots in a personal account and thinking I'm God in a week because I made 10 grand on a couple trades. And then immediately that account goes to zero. But it then takes that type of thing happening for you to reshift your mind, being like, no, I really need to learn how to do this on MES and really understand, trade setups and letting trades play out, versus like I threw on a 5 lot. It happened to move in my favor, and I think I know what I'm doing. It just allows your margin for error for learning, as well as even just understanding what a good trade looks like. Because we've been doing it, I feel like, more in the house account too, at times, where we're throwing on a 1 lot just to feel something. No, but we're doing, like, we don't need the 50 lot in theory to prove the thesis out. Like, we're taking this, we're defining our risk, and we're letting the trade play. It's not as entertaining as, us throwing out 50 grand, or for some people, us losing 30 grand in the house account in a trade.
Not as expensive either.
Right. But it's the same principle. It's like, hey, I have a theory and I want to have some skin in the game. That's why micros can be great while you're still learning and trying to establish your setups, your edge in theory. Can come from, taking those paper cuts with micros, versus like Coach Paul was saying, which is like, if you size up too much and you're just blowing through combines and you really were only in it for 2 trades, I mean, that's not a learning exercise. That's just a waste of everyone's time and a waste of your money, and because you got to reset and do it again.
So Nick, I don't know how often you watch At the Buzzer, but we do this thing called the scouting report at the end of every session. Just, if there's any other market that you may be looking at, I'll let Coach Paul go ahead and go first. Coach, anything on your scouting report going into the last day of the week, the first day of the month?
Playing the short side of S&P.
Here we go. Here we go.
There
Plain
it
and
is.
simple, a market that we all trade. Sometimes that scouting report is going to be some market that we haven't traded before. But the one thing I do like about scanning different markets, when you find one that you're comfortable with, and it's presenting a good opportunity, there's no need to scan, right? When the S&P and the NASDAQ are kind of chopping around, that's when I'll, look up and down the quote board for an opportunity. But when it's game time, it's game time. So Nick, how about you? Anything on your scouting report going into tomorrow?
Yep. Let's jump to my charts.
All right.
So we've been talking a lot about volume profile on my show, and I know we don't do this on fast markets because we're not as focused on the wider time frame, but we've been talking about this multi-week balance that NQ has been in, and this wider range between the 20,500s and the 20,000 mark. Well, just keep in mind, since we've been drawing this every weekend on Sundays, that we are now in the bottom edge of this balance. In fact, when we look at the last 6 weeks of price action, we are at the value area low, looking on the right there of my visible range volume profile. So all these candles, these different profiles here for the last few weeks, this is a spot where if we can't find buyers, probably going down to, 19,900s, maybe even in the high 8s, look out below kind of thing. Like, we're going to rotate into an older area of balance out of this balance that we've been in for a month plus. So just know that. But if we do find buyers, you might have a very nice Nick Dolby range trade as a rotation back into this wider edge of balance. So just keep that in mind. Going into tomorrow and into next week, if we start to lose 20,000s, I would not be trying to catch the knife. But if we do start to build volume back above 20,100, you should probably be long. That's my read.
For me, I'm going to put back on my bear costume for just about a half an hour. We got to finish the mission of the NASDAQ trading 20,000. So I'm going short right off the open. Again, anything we talk about here is not trading advice, for educational purposes only, and sometimes just a joke. I do not trade like that, so I will not be taking that trade. But for Halloween purposes, I got to finish the mission of 20,000 in the NASDAQ. So let's see if we get there. But we are at time. It is 5:15. I don't have much as far as my notes go. I'm going to find the Trustpilot link and put that in the chat. because if you do like what we're doing here, if you like what we're doing here on YouTube, I know you've already hit the thumbs up like button, but if you haven't done it already, don't feel afraid to. Um, but if you like what TopStep is doing, fill out a Trustpilot review, right? That's not just for what we do on YouTube, it's all the education that we provide. It is, the program, the XFA to live account process. Fill out a review there. MP reads every single one of them. So if you want to talk directly to MP, go ahead and leave your messages for him there. And then make sure you join some of the other segments that we have, not just on YouTube, but in Discord as well. Coach Hoop doing a class every Monday, Wednesday, Friday at 4:30 Central Time. Of course, we have Coach Ray at 6 p.m. Central, Coach Vince at 7, and then, of course, Dakota for slow markets at 7:30. And don't miss Nick for a Tick with the market kickoff every Sunday. Sunday at 4:30. Is that right, Nick?
4:45 Central Time, right
4:40.
before we open for Globex.
Very nice. Nick for a Tick, 4:45 Central Time, and of course Deanna Monday through Thursday with the London Open. She had Coach Ray on this morning. All of this education, hopefully, to make you a better trader. I want to thank you guys for joining today. Thank you, Nick. Thank you, Coach Paul. You guys got any final words before we go? Coach Paul, you go first.
Okay. Seeing
There we go.
as it is Halloween, I would ask you, what's your favorite candy?
My favorite candy, Reese's Cups. I bought some for the trick-or-treaters, and I've eaten a good amount of them already, so I need to stop doing that, and I need these kids to come and pick up this candy very quick, because I will eat through that whole bag. What about you, Nick?
I'm a big Kit Kat guy. But definitely more chocolate than candy is my house.
Yep. What about you, Coach Paul?
Oh, I get long Reese's, and I don't get trick-or-treaters where I live, so
All for you.
they'll be here through the holidays. Yeah. So, all right.
Any final words before we go?
Thanks for being on, Nick.
Yeah, of course. Glad to. Hopefully, we can keep doing this like every earnings season. That sounds like fun. But if not, thank you guys for having me. This has been a fun afternoon. I'm glad everybody had a good time. Trade safe out there. If you're going to be jumping back into the markets here in about 40 minutes, please do trade smart. Live to trade for tomorrow's open is what I would say to all of our overnight traders.
Is it. Thank you, everyone, for joining. We will talk to you all tomorrow. Have a great night. Trade well. Stay safe, and we'll see you then. Thanks. Bye.
All right. Goodbye.